Hello everyone and welcome to Mister. I'm your host, and today I wanted to go over some of my favorite value stocks. That's kind of been the hot thing this year, or at least recently, versus growth. Yeah, growth is value's outperforming so far this year. And that's usually because when rates go up, I believe, how do I look up rates? Was that like a 10-year? Maybe I'll go to Yahoo. Look at the 10-year bond. And last 6 months, it's been going up 30%. And that means companies have to pay 30% more in interest on their yield. I believe that's how that works. That sounds right. And so that means companies with money already are going to do better than ones that have zero money and need to pay off that money more. I think that's the relationship there. So looking at value stocks, stock usually starts off as a growth stock and then kind of transforms into a value over time. Google and Amazon, they were growth and they still are growth, but they're, eventually they start paying a dividend, and then, like Verizon or AT&T, the all old companies, been around for hundreds of years, Coca-Cola, Pepsi. But let's get into some of my favorites. A good place to start would be the value ETF, the Vanguard Value ETF. Pays a very low expense ratio, 0.04. Has a yield of 2.15%. Pretty low PE of all the companies in there, as compared to VUG, which has almost double the expense ratio. Or not expense, but PE. And the yield is obviously much lower versus even VU. Pays somewhere in the middle, 1.2% dividend, 25 PE. But we're looking at value, and I even wrote some down. I'll just show you the whole list. We'll get right into it. Sorry, wrong thing. Dagnabbit. All right, so these are some of the favorites here. AbbVie, Johnson & Johnson, and Pfizer. Those are three pharmaceutical type companies. Those are the dividend next to them. So just buying those alone, every quarter you'll get, 4% or 2.5% back of that share price. So that's a good place to start versus, a savings account which pays 0.25% of whatever money you put in there. So that's why you would invest in value and dividend paying stocks. Obviously, Pfizer is making the vaccine, and they've kind of had an interesting run since the pandemic started, but they're finally taking off now, like I thought they would have last year. Let's see. This was March 2020. $26. Around 30. Now high of 60, so doubled. Of course, the market's done that by itself. Just buying VU, it's easily up 200 to 420, so that's also doubled. Some more favorites on the value side. Pepsi. You could also put Coke in there. They pay similar dividends, I believe. Coke is a dividend aristocrat, so it's been increasing its dividend every year for like 50 years or something. 2.7, so they both pay a nice Nice fat dividend. I think Pepsi's probably been doing better. And they also have snacks. They have like Doritos, and so they don't just have drinks and restaurant stuff. They have stuff for the home and snacks, and so I like Pepsi. It's not too overpriced or anything. Let's move on. Some chip makers. AVGO. Broadcom. This one's done well. This is one I wanted to get in. Never got the chance. But pays a nice juicy dividend even with the high share price and it being a semiconductor type stock. Makes lots of money, so you really can't go wrong with this one. The other one considered in the same vein is Qualcomm. Not as good of a dividend, but obviously a player in the phone area. They have lots of patents that they have, so that's a pretty good one. Moving on from there, we got NextEra Energy. That's the only utility on here, and that's because it's a clean energy, green type utility. It's NextEra. It's done not so well. On 5 year, it's been doing well. It's beating the market. I think this is a good place to be. Future looking, kind of high PE, but pays good dividend. And they're going to continue to be the largest green energy givers for a while, I assume, at least on the utility side. 3M, manufacturer. They make the masks, the N95, all the other. They make so much stuff. I mean, you've probably used something of theirs in your life. Definitely underperforming the market, but it does pay a nice fat 3% dividend. It's got a low PE, so this thing on paper should be doing well. I don't know what their growth looks like. Maybe it's not doing so well. They've had probably a lot of money come in at the start that it's not going to continue. So I would think they would be higher right now. I would think they would be, past their old high and then like burning down slowly, kind of like this here. But that could be a good one, buy low, sell high. You don't always have to buy the one that's cracking new all-time highs. Morgan Stanley, that's one that I bought during the pandemic, I believe, and they're kind of like a bank, but they also have trading. They get revenue from trading and pays a nice 2% dividend, low PE. I feel like a lot of the banks you could buy as a value play. They all pay dividends, especially JP Morgan. I would buy them first. Pay nice 2.2. They're the largest. They'll continue to be the largest. So those are my favorites, and then there's some high-paying dividend ones in ExxonMobil and Chevron. Now you have to balance whether or not oil companies are still going to be valuable in the near future. I'm kind of hesitant. I think at the very best we'll probably trade flat for a long time or go down a little bit. But I just don't see Exxon or like gas companies taking off. I mean, those earnings would tell you otherwise, but it's right in line with what they believed would happen, so it's not that crazy. Let's look at Chevron. I mean, ridiculous dividends. Not even that low of PE. I'd expect lower. Same. They're in line, beating a little bit. If you're confident in it, go for it. But for me, it's hard to suggest. If you were buying down here at $69, then sure, that'd be good price to pay. But we're back at all-time highs basically, and is it really worth it? Who knows? So yeah, that's value. The market is selling off a bit today. It's a Monday after that rough week we had last week, so I really don't think we're going to go down significantly. I think we're going to continue trucking along. But, you know, when you get to a good support, you know, buy it some more. If we're looking at VU, I'd be buying it, yeah, probably right at 420. You know, fun number, 420.69 maybe, huh? And then maybe again at 400. And if we really started selling off, you know, 369, 350, some of the value, I'd be looking at 140, yeah, around 140 bucks. How about growth? Ooh, I'd maybe be buying right about now if I didn't have a good amount of growth already. Around 300 to 295, that's a sweet spot right there. So I've been buying VTI today even. I bought it 233, 234.56. I just like buying at those fun numbers. If I'm going to buy anyway, you know, might as well. And I would say that's at pretty good support right there. You know, I don't see it going much lower than 230. And if it did, 222.22, that's the sweet spot right there. That's where I'd be buying. Let's say you want to get into international. That thing's been going dead down. Let's see. Definitely underperforming. 58 or 60 bucks, that's a sweet spot. All right, so I hope you guys enjoyed this episode talking about value and you know, different styles. So if you like the video, leave a like and a comment, and I'll see you on the next one. Bye bye.